आपसे एक सवाल मैं पूछना चाहूंगा बिफोर वी थ्रो द फ्लोर ओपन, वो ये है कि अगर आप इक्विटी का एक लास्ट 20 इयर्स का एक टाइम फ्रेम लें, लाइक फॉर इंस्टेंस इफ यू टेक जस्ट मास्टर शेयर ऑफ यूटीआई विच इज अबाउट 20-21 years old, it's given 20% year on year. The general overall market returns कहते हैं कि पिछले 18-20 साल में 18% एवरेज एवरी ईयर कंपाउंडेड हैज इट्स बीन लाइक दैट. प्रॉपर्टी का क्या रिटर्न फिगर रहा है पिछले 10 या 15 साल?
Property, according to us, has also given about 25% return over the last 10, 15, 20 years or even 25 years. It catches up. It just catches up because money starts flowing into areas the minute it finds that there is an opportunity, and it is very smart, it is very fast, you know.
रेंटल है रेजिडेंशियल पे, उस पे जो यील्ड्स है वो केवल 4 से 5%. तो क्या अगर आप रेजिडेंशियल में इन्वेस्ट कर रहे हैं तो कैपिटल अप्रिसिएशन शुड बी द मेन reason why you invest in a residential, invest, not live in it. Invest in it and not necessarily the yield, because 4 से 5% is not even inflation beating.
Generally, अगर आप invest करते हो residential में, do not invest in areas which are already well established in this kind of a market. That's the point. So your target has to be capital appreciation, but in growth areas. If you invest in, say, an established location, then you are really neither investing for capital appreciation. You will have to do good with the 3-4%, 5% yield. Maybe the yield will be slightly better because there the rental demand is immediate.
Okay, let's go across to the question answer now. Yes, sir. Go ahead, sir.
Can you please explain or elaborate on REITs? You had said something about the REITs.
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 REITs are very similar to mutual funds. Abroad, internationally, what happens is that individual and institutional money is collected under a collective scheme, and it invests in income generating assets. The idea is to invest in income generating assets. So they buy assets which will or are already rented, see if the yield is attractive. While buying these assets, they also leverage. As I said, leverage means they essentially go and take some amount of debt. So the total return which comes on the asset, the total yield which comes on the asset goes up. The objective there is, internationally and everywhere else, you know, the interest on debt is very low even still compared to India. So the pension funds, the insurance companies, all of them invest into REITs, which invest into real estate in a very scientific manner, into assets which generate income. So they will be income generating assets, commercial assets, warehouses, industrial assets, etc. But it can be taken a step forward also, that REITs can also invest in projects, and in some cases it is happening into development projects where there is not only income coming from the yield of the asset, but also if they sell out there is a capital appreciation. The way a REIT is structured is very efficient. If, for example, internationally, and I'm hoping that happens in India, if 90% of the income earned by a REIT is distributed, it will be completely tax free for the REIT and in the hands of the investors. As I said, debt is very smartly paid because you and I can take loans at 13%, 14%, but when a REIT takes loan, it can take at substantially lower rates. So your return can definitely go up. So the income, the asset will be earning say 10, 11, 12%. The debt can be at even a lower rate, and for a very competitive total bouquet of terms which are offered, and the return to the investor goes up. REITs are also instruments which are listed, so there is complete liquidity. You literally enter and exit REITs as though in shares. NAVs are calculated in a very scientific manner, but essentially the REMFs, the real estate mutual fund model, is based on the REIT model. Internationally, it's only REITs, there are no REMFs. Internationally, REITs invest in income generating assets. They use debt to improve the yield on the asset, and people who have invested earn a yield on the unit that they bought. At the same time, there is sufficient liquidity. If interest rates change in the economy, there is capital appreciation happening in the project that they've invested. The value of the underlying unit also goes up, so they can make capital appreciation also on that.
What you're saying, Harvesh, is that I can, with a few thousand rupees, invest in an instrument which in turn is investing in residential, commercial, everything about property. So I don't need to go and buy property on my own. With a few thousand rupees also, I can take a bet on property investment. That's what a REIT does.
And it's a direct exposure. The manager takes money from you, directly invests. What he really does is really charges in terms of management fee, etc. It is very different from the mutual funds currently which invest in real estate companies. So mutual fund, most of the real estate mutual funds which are on, they will invest in companies, if I'm not mistaken, which operate in the real estate business. Like they would buy a Unitech, they would buy a Kolte Patil, they would buy a, DLF, etc. While in a REIT, they will largely and by and large not invest in stocks of listed real estate companies. They will invest directly into properties. So you get a direct exposure to properties.